Hey everybody, this is David Skrika. So stock chart of the day here. So I got an interesting one today. We're gonna look at Berkshire Hathaway. And part of the reason is because, of course, the great Charlie Munger just passed away, 99. It's a pretty good life, but you gotta be a little frustrated when you make basically 99 in 11 months and miss 100 by about a month. So not that it really matters, but anyhow, of course, he was Warren Buffett's kind of right-hand man. A lot of people think he was some people think he's more actually was more the reason for the success of Berkshire Hathaway than Warren Buffett. So that's up for debate, but he was a great investor. He had a very blunt, kind of simple way of phrasing things. So here are just some quotes from him just to start here. He always said, live within your income and save so you can invest, learn what you need to learn. A lot of people think they have 100 stocks, are investing more professionally than they are at 4 or 5, regardless of sanity. Like right now, one thing that I've done recently with the pay version is we've got about 4 or 5 turnaround plays outside of the gold plays that we own. And I'm kind of just, waiting on them right now. And they've started to move higher. So it's like, yeah, people think I think the problem when you get over diversified, you just basically start doing what the averages do. So I kind of agree with that. And if you go look at Warren Buffett, he usually goes between about 5 to 10 stocks at the minimum and about 20, 25 on the maximum. So if basically essentially one of the richest men in the world and famous investors in the world doesn't own more than 20, 25 stocks, you have to ask yourself why you should as well, and then of course, if I think you would understand any presentation using the word EBITDA, if every time you saw that word, you just substituted the phrase bullshit earnings. So, like I said, he had a way with words. And EBITDA is something that, being investing for 25 years, I really have heard it a lot in the last, 10 years. So maybe he's on to something there. So we'll just look at, this is Berkshire Hathaway. Let's get it right from where you can go in stock charts. Going back to 1980, so we'll go 79 because, it's November 79. So you can see you can see it actually, this actually only goes back to, because they did the B shares. Just do BRK. Yeah, I guess that's all you can get, because they did do the B shares, right? So anyhow, yeah, you can see that went back to 1994, and you can see what is done since 1994. So let's go back to 94 then. Yeah, the stock was listed at basically under 10,000 a share. I think it was 5,000 or 6,000 a share, and now trades at, you see even more on this kind of scale, at over $500,000 a share. So they did the B shares as a way that smaller investors can own it. Actually, Warren Buffett never really believed in stock splits. They did that. But you can see this is Berkshire Hathaway, something these large cap, more conservative companies. And remember back I still remember back here when you can see it bottomed right actually when the tech stocks topped. And if we go back just to kind of look at what that had done there, actually you can see that the IPO price actually was closer to about 15,000 back here in 94, but still 15,000 to nearly to 550,000, to make, again, 30 times on your money. The Dow has not gone up 30 times since 1994, and something you would consider to be quite, conservative. So you can see in 98, before the rushing prices, Berkshire, peaked at around 80,000, and it bottomed right when .coms, topped at about 40,000. So it went down 50%. Well, the NASDAQ went crazy. I'll do a quick chart of the NASDAQ just so we can see that. Let's do the triple Qs actually, and you can just see that. And you can see I guess we'll get the NASDAQ 100. The NASDAQ 100, you see in the same time frame, went from about 1,300 to 4,700. And then people wondered, as Buffett was kind of dated in his investment philosophy. And of course, it just happened to be a bubble. And, after that, you can see that it really outperformed after that, going forward. So, being someone who is kind of a value investor, I kind of have a mix of doing my mining deals, and that's my speculative money, and then I'm a value investor. I do more small caps than Warren Buffett on the kind of turnaround value side, but I kind of respect, the fact that he did not give into that and not chase deals and the whatnot. And, the NASDAQ was still, 50% below its high in mid 2007 before the 08-09 crash. And you can see that, Berkshire Hathaway was, basically double its 98 high then, and has done extremely well. And remember, you are taking on probably less risk with Berkshire Hathaway than you would be with the NASDAQ and the whatnot. So these are the B shares, and you can see these kind of listed as a way, because again, he didn't really want to ever split Berkshire Hathaway. So these were spun off as a way for like kind of a retail investor to do it, because you can see they were $25 and now they're $360. So someone, one share only cost you $360. So the same kind of thing here. And you can see just how great this asset bubble has been, though. Like, Berkshire Hathaway, which bottomed at 50, the B shares anyhow, back in the financial crisis, has gone up 7-fold in just 14 years. So I don't know how sustainable that is. I don't think Buffett would think that's sustainable. But anyhow, I just like to say rest in peace to Charlie Munger. One thing I've been planning on doing is my Greats of Investing series. I'm going to take an investor and either once to twice a month. And now that I'm not really doing the stock charts of the day on the weekend for the other than just posting a chart, not doing the videos for the free list. So maybe I'll start doing the Greats of Investor series. Maybe I'll start in the in December. I'll probably start with Sir John Templeton, because he's living in the Bahamas, taking a lot of what he has said over the years to heart. I'll probably do him first, and then I'll probably do Jim Dines, because Dines had a really big effect on me early on in my life, and then maybe we'll move to Charlie Munger afterwards. Those will take a little more research, because I'll need to read a little more up, because I don't know. I know Dines, I know Templeton inside out already, but there's not every investor, of course, I'm going to be there, and I think that'll be interesting. Like, we'll do Soros, we'll do Jim Rogers, we'll do Paul Tudor Jones. The list goes on and on and on. Maybe I'll mix it in with a great trade series. Like, a lot of people have like a famous trade that they've done, that's either a long-term trade like Warren and Charlie with Coca-Cola, or a short-term trade like Soros breaking the British pound. So I hope you enjoyed this. Like I said, rest in peace, Charlie Munger. I wasn't, obviously this one, when I saw that he passed away, I decided, I should do something on that. Too bad he didn't make it to 100. So everybody take care, and maybe may we all be so lucky to live to 100, or I don't know if maybe unlucky. Who knows what it is, because I'm sure that your 90s isn't exactly the greatest quality of life. So everyone take care, and I hope you enjoyed this.